A lot of folks along the way are pointing to the bond market rally and saying, hey, I actually think, bonds must know something. And if there's one thing we've learned over the course of the last couple of years is that the bond market may not be the smart money. I mean, how many times have we gone through this process where a massive amount of cuts get priced into the market? Remember, the short rate market priced in four cuts in March of 2023. The bond market and the short rate market priced in four cuts in 2023. Where are our four cuts? Right? Totally expectations that were totally inconsistent with how the economy played out, because the economy was much more resilient than folks expected. Similarly, we're basically seeing a repeat of that pattern, which is a whole lot of cuts are being expected. And then in many cases, what folks are doing is they're looking at the bond market and they're saying, look, bonds are rallying hard. They must be telling us something about what's going on. But I think what we're seeing today in many ways is a repeat, and a more extreme repeat, of what we saw in late 2022 that set ourselves up for a pretty big bond sell-off in the beginning of the year. And what that is we've had a big underperformance of long-term bonds relative to stocks over the course of the year. Long-term bonds through Thanksgiving were down about 25% relative to stocks. What that mechanically does is, for big institutional investors that have targets for stocks and bonds allocation, they must rebalance back into the underperforming asset. And they typically do that sometimes at quarter end, but almost always are doing that right there before the end of the year, but in that Thanksgiving period through the end of the year. And increasingly what we're seeing is that fast money hedge funds are recognizing that this is a typical dynamic and are in some ways front running the actual flows. And so what you saw in 2022, in late 2022, with that red line, which is Thanksgiving, noted, is after a period of some underperformance of bonds relative to stocks, you saw a pretty good bid for bonds for a few weeks through December 17th. And then what happened was the fast money sold it to the actual rebalancing, and bonds came back down. I think we're probably seeing a similar dynamic where, but only at a larger scale, where the significant amount of underperformance of bonds is creating that short-term rebalancing, which is putting pressure on bonds and obfuscating the positive growth dynamics, the positive liquidity dynamics that have come from this easing, and showing up as a bond rally. Now, that can persist for so long, but my guess is we're going to start to see the pressures ease off of the bond market, and equities will outperform bonds as that rebalancing pressure starts to fade.